Hello, and welcome to another episode of Connecting the Dollars. Today, we are going to talk about some lessons we learned from 2024, just the market in general. First, we're going to cover some general sentiment of the economy, how international versus domestic stocks or just markets in general have played out this year, and the tech dominance in especially large cap stocks, and then things we are keeping our eye on for the future. So, my name is Emily Gusso. I'm a CPA and financial advisor at Propel Financial Advisors.
And I'm Amanda Vaught, attorney and fellow co-founder with Emily.
All right, Amanda. So, let's jump in. 2024 has been a strange, well, I wouldn't say strange, but it's been a year. We'll say it that way.
Yeah,
We
right.
kind of started off the year with sentiment of saying that we were still going to have a recession, and that was kind of flowing through from 2023 and un, the uncertainty after COVID and not sure what the Fed was going to do this year. So, yeah, what's your take on that?
Yeah.
What did we learn from that?
Yeah, I think everybody was so sure, right, that the economy was going to crash. Remember, nobody thought a soft landing was possible.
Hmm.
Um, Everybody thought the Fed was cutting rates 8 times, 10 times these huge rate cuts would be coming. And none of that came to pass. I
Nope.
mean, maybe a little bit. I mean, the Fed cut rates a few times, um, but they didn't start till, later in the year.
Right.
And then I think throughout the year, people gradually seemed to realize the economy was like a lot stronger than they thought. And now coming into the end of 2024, there's this incredible bullish sentiment out there, and
Yeah.
I think it's just, I going back to before I was start about talk about 2025. I think 2024, a lot of people were positioning their investment portfolios as if there was going to be a crash or a downturn,
Hmm.
and the rates were going to go down. And I think, that's a great lesson that, we don't know the future. We don't know what's going to happen. And if you start positioning your portfolio as this, you know, thinking one thing is going to happen and then the other thing happens, it can really burn.
Yeah, there
Right.
was so much. I mean, I think it was around May when we were waiting for that first cut, and inflation had gotten so high. There was just so much negative energy around. And I think that quarter was not even like the second quarter was pretty stable. If I
Yeah.
This S&P 500 was pretty flat, it seemed. So it's just kind of interesting. Like, even you can think about like, oh, I felt terrible about the economy this year, and you can look back at the numbers and like, actually, it was not that bad. So it's mind games
Yeah.
that we play
Yeah.
with ourselves.
Yeah, exactly. Some economists called it a vibe session. It was just some people kind of had this feeling that things weren't right. But when you looked at the actual numbers, the economy was doing okay. Maybe it had slowed down a little bit, but it was by no means slowing significantly or crashing. There were no giant layoffs coming.
Mhm.
Inflation was coming down. I think that's the one of the things we'll touch on later of things we're watching in 2025. But
Mhm.
um, I do think that's a great lesson, especially going into 2025 when the sentiment is really high right now. There was a good article in the Wall Street Journal recently about how significantly high the sentiment was. Um, you know, I don't want to be, a nervous Nelly about it, but sometimes when sentiment is super high, that's kind of a contrarian signal that maybe it shouldn't be so high. So,
Yeah.
not that I know the future either,
Right.
right? You don't know how it's going to go. Um,
Yeah.
but you got to take all this stuff with a grain of salt, right?
Right. The takeaway is, like we say in so many situations, don't make any emotional decisions. Like, stay the course. And the most important thing is to pay attention to your risk tolerance and listen to your financial advisor, who's been helping
Hmm.
you thus far, hopefully, or maybe
Right,
start working with us. Call us, and we'll
right.
walk you through this if you are feeling very uncertain.
I do want to just touch
Yeah,
on a little bit, we had a big election, a change in administration, and there's a great chart between red, people who identify as red, Republican versus blue Democrat, that after the election, the red outlook went way up, the blue outlook went way down. Um, it's so much can be influenced by things outside of what's actually happening in the economy, right?
exactly.
So it's just be aware of it.
Mhm. All right, let's move on to the next topic is international versus domestic. And so in 2024, the dollar has been pretty strong and international has, I don't want to say done poorly, but how would you put it?
I would say it has lagged.
Lagged.
Um, the US domestic market,
Hmm.
um, the US stock market has outperformed international markets significantly. And I think a lot of people keep waiting for the other shoe to drop, and eventually that will switch, which historically it does switch. Um, but that time seems to be, not coming. And we
Hmm.
don't know when it will, right? Um, In 2022, there was outperformance of international stocks over domestic, and
Hmm.
that outperformance was really um, just it's not that they made a ton of money, it's just they didn't get hurt as much as domestic stocks, right? If you
Right.
recall, in 2022, we had a major market downturn. A lot of the tech stocks tanked.
Hmm.
International just didn't tank as much.
Right.
Um, which is great at the time, right? But we still haven't seen that shift to see international really outperforming. And so, what does that mean for us, right, for regular people? I think a lot of people just use their default target date fund in their retirement account and don't realize how much international exposure they do have, right, Emily?
Yeah.
Um, what was the number? It was between 30 and 40% international.
Right. And those target date funds, those are typically like if you have a 401k and it's with your company and it's just invested in Vanguard, or you have an IRA on your own and you use like their allocations for you just based on
Yeah,
your age and nothing else.
yeah.
Vanguard Fidelity, there's all kinds, not just one.
Uh-huh. Exactly. And I think um by buying into those funds, don't want to be super critical of them, but I'm not trying to be, but if you buy them, you're making a significant bet on international markets. And I think a lot of people may not realize that they're doing that.
Right.
Um,
And while those funds will reallocate more towards fixed income over mutual funds, individual stocks over the years as you age, they may not necessarily change the allocation or rebalance as frequently as you would be able to if you were managing the account with your financial advisor on your own.
yeah, yeah. Um, and then I'm a little concerned for the people also who are the majority of people have not saved enough for retirement. And what they do have being in a target date fund, and if it continues, international markets continue to drag, um, that's not going to help them any. So,
Yeah, you lose
something to
that
be
asset.
aware of.
Yeah, definitely.
Yeah.
I was gonna say
And I
something
like
about target
international
date.
markets. We do buy them for our clients. I'm not trying to
Right,
be
it's
negative.
diversification.
It's diversification, but there's also, the dollar is very strong. Um, that's going to continue to hurt international markets when you convert the currencies. But we can adjust our portfolios to take that into account.
Exactly. I think it was like maybe the early 2010s when emerging markets were outperforming or that particular sector was doing really well. And that was a huge thing that everyone was talking about. And that was, I mean, maybe 10 or so years ago. So I feel like over the last 10 years, and this is just my opinion being like adjacent to the financial industry, being within it, even though I focus more on tax,
Mhm.
that it's really not been talked about like that for a while, where people were really excited. So just kind of another, I don't know, data point where
Yeah,
it's something we're keeping an eye on, but it's also something that we can do something about
right.
rather than
Yeah.
just like be like, oh well, maybe it'll come back.
Yeah. Like, do you need this much exposure to China right now?
Right.
Yeah,
You can
exactly.
say.
Yeah.
Okay.
But speaking of diversification,
Yes.
what's our next topic?
Our next topic is the dominance of tech companies in the stock market this year. I mean, this year was the whole Nvidia blow up, and not blow up in a negative way, like huge increase in the stock market. And yeah, so a lot of
That's a lot of
people,
attention, right?
exactly, there was a lot of attention. A lot of people were like, buy, buy, buy in this industry. But when you look historically back at other industries, we can see that other industries have maybe outperformed tech stocks over the long term. What are some of those, Amanda?
Yeah, I think the tech does get a lot of attention, right? And they were the best performer in 2023, and a lot of that great performance did continue into 2024. But we also saw the financial sector really take off in 2024. The industrials really came back in a big way. Um, Other sectors of the stock market did really, um, outperform. And I think a lot of people still think that tech is really dominant and that's the big story. But it's just there's other stuff catching up, which is good, right? If you have a diversified portfolio, you're getting broader, you're getting breadth, right? It creates a healthier rally in the market if more sectors are participating rather than it just being focused on tech.
Right.
Um, but I do see this in prospective client portfolios and other places that there tends to be a concentration on tech, which I think if you do want to make that bet on a sector, sometimes, that can come back to bite you. Um, because I didn't see a lot of prospective portfolios with this overweight to the financial sector.
Yeah.
Um, and so that's the thing about diversification is that it feels like maybe you're missing out because you
Right.
don't have this big overweight to tech. But if you did have exposure to say financials or industrials before they took off, you really benefited from that.
Right.
And now, right, if you see it in the news, oh, financials are doing good. Now you're like, oh, maybe I'll buy into that. It's like the big jump already happened. So
Right. Yeah, you missed the market there, or the timing. I mean,
yeah, right.
it's
So how many
similar.
lessons are in that story? Like a million?
Exactly.
Yes.
It's the age old, like, I mean, you don't want your whole portfolio to be Apple or Starbucks or one of the big stocks that, over the past 10, 15 years were so hyped that it's the same idea. You don't want to have just one industry dominating your portfolio because things change and
Yeah.
quickly.
Yeah. Yeah. And I think sometimes people don't appreciate the risk they're taking when they do that.
Right, because the stock or industry is doing so well at that moment. But like you said, you may miss out on jumps in other industries, other stocks, etc.
Sectors. Yeah.
Sectors.
Yeah, for sure.
Yeah.
So I don't know. Hopefully the market breadth continues into 2025, but we'll see.
Yes, we will see.
All we
Speaking
can
of,
do is keep our diversification in place, right?
right, exactly. That is one of our big goals is to keep your portfolio diversified so that you don't ever experience a huge downturn or protect yourself from that downside, I suppose. Is a better way to put it. But anyway, speaking of things we don't know, I mean, things we're keeping an eye on. So the Fed, we kind of had an idea of where they were headed this year, but they also kind of surprised us a little bit with the change in sorry, what month was that? Was that in October? A couple of months ago?
Yeah. Oh, when they did the big cut by
Yeah, the big cut.
Yeah.
Or
Yeah.
people expected a cut, but not as big of as a cut as they did to the interest rate. So the Fed is one thing we're keeping an eye on, and that's related to inflation and mortgage rates. So those are things that, it's the same kind of idea, like things you hear in the market, like, oh, it's a bad time to buy a house, which economically, in terms of the mortgage rate, may be true. But there are so many other factors that come into something like buying a house. So it's sort of like these are things where, sure, keep an eye on what's going on, but also you have to look at how it's affecting you personally.
Yeah. Yeah. Right, like personal finance decisions don't always make sense numbers wise, right? But they
Right,
work for your personal life because you might need to buy a house,
right,
whether or not the interest rates are high or low, or mortgage rates are high or low, right?
right. So
Um,
even though, like, home sales might be slowing, they're still happening for many reasons.
yeah, yeah. So I think the lesson there, right, is to try to keep some flexibility in your finances if you can, right? 'Cause if you do get in a situation where you're trying to, excuse me, sell a house, the market's bad, and you have a bunch of money tied up in your house, that can come back to bite you, right?
Right.
Um, so
Yeah, if you spend most of your savings on a home and you don't have a lot of liquid cash and you get stuck. I mean, that's a general rule we talk about with purchasing homes in general. It's the same thing like putting all your money in one sector,
yeah,
putting it
yeah, it
all
goes
in
back to
housing.
diversification, right? Yeah.
But
Um,
also about the Fed, do you have anything to add about the Fed in general or inflation that we are keeping an eye on?
yeah, I think inflation has been coming down, but it's getting sticky. Um, or stubborn. I mean, and now with a new administration coming in, a lot of economists expect inflation to go up. Sometimes inflation can become a self-fulfilling prophecy. So a
Mhm.
lot of the conversations around um, Trump's policies around tariffs causing inflation leads people to say, "Oh, I'm going to buy this now before inflation comes," which causes the inflation, right? So, those inflation numbers will keep our eye on because the Fed keeps their eye on that, right? They're not going to be as inclined to cut rates if inflation starts going up, and they might even increase the rates um, if inflation spikes again. So we don't know how that's going to go, right? We don't know what the Fed's going to do, um, but that's definitely something we're keeping our eye on.
Yes. All right. So those were our thoughts, what we've learned, just reflections on 2024. It's been another interesting year, as I said at the top. Maybe strange,
Mhm.
maybe not so
Yeah.
strange, but just different. Any final thoughts, or shall we wrap it up?
No, I think that's good. I think it was, if you were in the stock market, it was a great year. If you were not in the stock market, you kind of got left behind. So,
Yeah.
um, the best time to invest in the stock market is today. So
Yeah.
even if you missed out, don't let it stop you. Just keep working on, reaching your financial goals, and
Yeah.
eventually we can get there.
Yeah. And if you're nervous about it, scared, etc., we're here to help. Info at propelfinancialadvisors.com is our email. You can find us at propelfinancialadvisors.com online, on Instagram and Facebook,
All the time.
LinkedIn, all of them.
Yeah, yeah.
So, yeah, send us any questions or if you have any ideas for topics you want to learn about a little bit more and how they relate to you directly, let us know. Otherwise, we'll see you next time.
Okay. Bye, Emily.
Bye. Thanks.